Okay, guys, good morning. See, yesterday we have started with clubbing. We have already covered section 60, 61, 62, 63, and we have started with section 64. In section 64, subsection 1, we have started, and in that also clause 2 we have completed. Okay, no? Now, see, this is an important clause, clause number 4. If you'll understand this clause properly, no? So the remaining 3 clauses will be very easy for you. Okay, no? Because remaining 3 clauses are similar to this one. Okay. Next one. See, if you are an individual, you have transferred your asset to your spouse. Which asset? Which asset you are transferring? Any asset. Any asset, any asset. Other than house property. And you have transferred that property directly, transferred that asset directly or indirectly without taking adequate consideration and without an agreement to live apart. So there is no agreement to live apart and you have not taken the consideration also. So without consideration, without an agreement, the asset is transferred. Which asset is transferred? Any asset other than house property. Then from this asset, whatever income the spouse is earning from the transferred asset, okay, that income will be clubbed in the hands of the individual. Transferor, individual. Why is so? Simple. The asset was giving me income. Asset was on my name. Income was coming on my name. Yes or no? And I'm already an individual whose income is more than 10 lakhs. So definitely the income of this asset is over and above 10 lakhs. That income I don't want to earn on my name, and on that I don't want to pay tax. So instead of having that asset on my own name, let me have that asset on the name of my spouse. Since there is no agreement to live apart, me and my wife, we are staying together only. And if we are staying together and if I will transfer the asset on the name of my spouse, the asset will stay with me only, no? Since my wife is also staying with me. So, asset is still there with me. But now earlier it was held on my name, now it is held on the name of my spouse. Income of that asset was earlier coming at my home only, but it was coming on my name. Now also the income will come at my home only, but it will come on the name of my spouse. So, still the asset is in my control, income is coming at my home. So why have I done this? I have done this because I don't want to have that income on my name, so that I have to pay 30% tax on that. Yes or no? So what they are saying, that we know very well that why you have transferred this asset to your spouse like this. So whatever income from the transferred asset is there, that income will be clubbed in your hands under section 64 subsection 1 clause 4. Did you understand this? Everyone? So asset should be which asset? Other than? Why not house property? Because if you transfer your house property like this now, you are already considered as a deemed owner as per section 27. If you transfer, an individual transfers a house property to spouse without taking adequate consideration, without an agreement to live apart. For that house property, this individual is already a deemed owner. And the income of that house property is already taxed in your hands, considering you as a deemed owner. And if we don't exclude this type of property now, what will happen? The income will be taxed in your hands for the second time by applying the clubbing provision. So we don't want to charge the income for the second time. Yes or no? The income is already taxed in your hands by taking you as a deemed owner. So other than house property, any other asset is transferred. Yes or no? Income of that asset will be clubbed. Understanding? Yes or no? So read this note number 1. Done. I've just now explained this. Yes or no? Now pay attention. Who is this? What asset he has transferred? To? Okay. So income of the transferred asset, income of this asset is liable for what? Clubbing. So the asset which I have transferred, the income of the transferred asset will be liable for clubbing. Now what if I have transferred asset A, asset 1 to my spouse, which my spouse converted into some other form? Possible. The form of that asset was changed. I transferred debentures to my spouse. So interest on that debenture will be clubbed. But what if my spouse exchanged those debentures with shares with my brother? Can it happen? What did I give? Debentures. So interest on that debentures will be clubbed because it is a transferred asset. Yes or no? But what if that transferred asset, the form of that asset is converted into some other asset? Possible, no? My wife have exchanged those debentures with my brother. My brother gave shares, and the debenture which I gave to my spouse, no, those debentures were given by my wife to my brother, and in return my brother gave what? Shares. Now what my wife is having? Is she having debentures anymore? Or debentures are converted into any other form? Any other form means shares. Now she will receive dividend from shares. Will that dividend be clubbed? Will that dividend be clubbed? But dividend is not coming from an asset which I transferred. So there is an explanation. There is an explanation which says that if the original asset which is transferred by the individual is converted into any other form, then income of such converted asset will also be liable for clubbing. If this is not done, nobody will keep the asset in the same form. Everyone will convert the asset in some another form. Yes or no? For example, I have given cash to my wife. Is she having cash? No, because she is converting that cash into a house property. She is buying a house property from that. So the income of that house property will be clubbed in my hands by applying this explanation. Sir, but for house property you are a deemed... No. I am a deemed owner for the house property if I have transferred the house property. Did I transfer the house property? No, I transferred cash. And the converted cash, transferred cash is converted into some other asset. For example, it was converted into house property. My wife bought house property from that cash. Now what was the original asset given? Cash. It was converted into other form, meaning house property. So income from that house property, income from that converted asset will be liable for clubbing in my hands. What if I have given cash and my wife kept that cash in a bank FD? Asset remaining same or converted into some other form. So the income from that bank FD, interest, will also be liable for clubbing. Getting my point? So read this point. Note number 4 and note number 5. Note number 4, note number 5. What have I gifted? And cash gifted is invested in. So interest on the bank deposit will be liable for clubbing. What have I gifted? Gifted cash is invested in a. So income, rental income of that house property will be liable for clubbing. Clubbing will happen because I applied this explanation. Getting my point? Now tell me what they are saying. The asset which is transferred or even the converted asset, the income of that asset will be liable for clubbing. So whether the asset should be the transferred asset or that transferred asset is converted into some other form, any income of those assets, what did I say? any income of those assets will be liable for clubbing. For example, I gave some shares to my wife. So which is the asset which I gave? Shares. Dividend from shares will be liable for clubbing, will not be liable for clubbing. Sure. What if those shares are sold by my wife? It will result into dividend or capital gain. My question is whether that capital gain will be clubbed or not. Did you understand my question? Tell me. Even the capital gain will be clubbed. Because nowhere it is written that the regular income of that asset, revenue nature income, only that will be clubbed. Any income arising from that asset, even the asset is transferred and the resulting capital gain are there, that capital gain will also be liable for clubbing. So any income, what did I say? Any income from the transferred asset or even the converted asset, whether that income is revenue in nature or is in the form of capital gains, will be liable for clubbing in the hands of transferor individual. Yes or no? Read this note number 6. I transferred a capital asset to my wife. That gifted capital asset was sold by my wife to some other person. So from that gifted capital asset, on the transfer, whatever capital gain will arise in the hands of my wife will also be liable for clubbing. It will also be clubbed. Okay. Now, very important thing. Who is this? Transferring what? At the time of transfer, transfer is made to whom? Transfer is made to spouse. Transfer is made to, and the income of that asset, income of the transferred asset is earned by whom? Then that income will be clubbed. Yes or no? Now one question I am asking, give me the answer properly. I transferred one asset to my fiancé. I transferred one asset to my fiancé. Okay. Yet to marry. Not yet married. Okay. My parents fixed my wedding with a girl. Okay. So, wedding is fixed and marriage date is announced. So, it is a courtship period. In the courtship period, we are meeting. We fell in love. Okay. So, out of love, I gave my asset to my would-be wife. Would-be wife. Fortunately, I married the same person. Okay. So after marriage, whatever income from that asset is coming to my wife, which I transferred to her when she was my fiancé, will it be clubbed or not? Be very careful before answering. Did you understand the question? What is the question? Income is earned by my wife, but that income is coming from an asset which I transferred to her when she was not my wife, when she was my fiancé. Will the income be clubbed? The answer is no. Why? Because at the time of transfer, the transfer was not made to spouse. They are saying that the individual should transfer the asset to. So at the time of making the transfer, the transferee was not my spouse. So even if afterward she becomes my spouse, yes or no, the income of that asset will not be liable for clubbing. It will not be clubbed in my hands. Then sir, everyone will start doing it. No. or do. You are a biggest fool like me. I'm fortunate that I got married to the same person, but nowadays you know na, what happens? Marriage is fixed. It immediately gets cancelled. Understanding what I'm trying to tell you? Nobody will be doing like that. And if someone has done like that, then he's a fool. Understanding? So don't call me a fool from now onwards, huh? Sir, you did that. I haven't done that yet. I'm just giving you an example. Okay? Now tell me, for example, let me change my example. I am an individual. I transferred my asset to my spouse only. But she was not having a good nature. Always she used to fight. Always she used to hit me. Yes or no? Every time she will say bad words to me. So I'm fed up. So what I did? I gave her divorce. Okay. No, I did not give. I asked for a divorce and she was, as a blessing she gave me a divorce. Okay. So now we are divorced. Oh, what do you think? At the time of asking for divorce, if I'll ask her to give me back my asset, will she give? She did not give that asset to me. That asset is still with her, even after the divorce. Now she is earning income from that asset after my divorce. Tell me, will that income be clubbed? No. I transferred the asset when she was my spouse. So income of that asset should be clubbed with me, no? Income should accrue to my spouse. Income from that asset accrued in the hands of my spouse will be liable for clubbing. So after the divorce, legally she is not my spouse. So the income of that asset after the divorce, even if the asset was given by me at the time when she was my spouse, even if the income of that asset will not be liable for clubbing. Why? Because its income from this asset is accrued at the time when she is not my spouse. We are legally separated. Yes or no? So, what is the conclusion? Tell me. Two examples I gave, no? So, what is the conclusion? The relationship of husband and wife must exist. Must exist both times. At the time of transfer of asset as well as at the time of accrual of income. Only then the clubbing will happen. If that relationship is not there at the time of transfer, or the relationship is not there at the time of accrual of the income, then there will be no clubbing. If adequate consideration is taken, then there will be no clubbing. If there is an agreement to live apart, then there will be no clubbing. Getting my point? So clubbing will happen only if at the time of making the transfer, the relationship of husband and wife is there in existence. And at the time of accrual of the income, the relationship of husband and wife is in existence. Yes or no? It should be existing at both the times. At the time of transfer as well as at the time of accrual of income. Supreme Court judgment. In the case of Philip John Plaskett Thomas. 4 persons? No, only 1 person. Name is like that. Read. Note number 1 and 2 done, no? Read note number 3. Read note number 3. Do it fast. Note number 3. Husband and wife must exist at the time of as well as at the time of accrual of income. Done, sir? Note number 4 done. Note number 5 done. Note number 6 is done. Okay. Now, Gokul, what is the name of this fellow? Your friend? Ajit. Ajay. Ajay. Okay. Now see what happened now. Ajay transferred one asset to his spouse. Ajay did not take any consideration. And there was no agreement to live apart. And Ajay transferred one asset to his spouse. Now tell me, the income of that asset will be liable for clubbing in the hands of Ajay or not? Will it be clubbed? Why? Because the transfer was made at the time, at that time the relationship of husband and wife was in existence. Yes or no? Income is earned at that time also. The relationship of husband and wife is there. Consideration was taken. Money was taken. Without taking the consideration, the asset is transferred. And is there an agreement to live apart? So all conditions are satisfied, no? All conditions to do the clubbing are satisfied. Now what this Ajay is saying to the assessing officer, that assessing officer, there will be no clubbing. He says, Macha, you have satisfied all the conditions. All the conditions of making the clubbing is satisfied. Then why are you saying that no clubbing will happen? Ajay is saying, sir, whatever you say, clubbing will not happen. Why not happen? Ajay is giving an argument. And see the logic which he is giving. You will have respect for Ajay, you know. If you will learn what logic he is giving. He is giving this logic. Sir, although I have not taken a monetary consideration from my wife, but you know, my wife loves me so much. The kind of love and affection which she gives me is a consideration for which I am transferring the asset. So you cannot say that I have transferred the asset without taking adequate consideration. I have transferred the asset and in return I am getting love and affection from my spouse. So accordingly, the asset is not transferred without consideration. Asset is transferred for a consideration. And what is that consideration? Love and affection. See? And this is a real case which I am telling you. And this case went till Supreme Court. Name of the case was Tulsidas Kilachan. Name of the case law was Tulsidas Kilachan. In his case, the assessee argued this, that the law says that asset should be transferred without consideration in order to attract the clubbing provision, right or no? But I am saying that I have received consideration from my spouse in the form of her natural love and affection. So you cannot say that I have not received consideration. Bloody whatever love and affection which he is giving, no, is an adequate consideration for me to transfer that asset to my spouse. Now just imagine, logically the assessee is correct. Logically she is correct because the law says that the consideration should be taken. Without consideration the asset should be transferred. Only then the clubbing will happen. And he is saying that he has got the consideration in the form of love and affection. So now the question of law was whether this natural love and affection will be considered as a consideration or not. Tell me. What should have been the Supreme Court's judgment? The Supreme Court gave the judgment that the natural love and affection, although it is a consideration, even the court agrees that it might be a consideration, yes or no? But since it cannot be expressed in money terms, cannot be treated as a consideration for clause 4. Because clause 4 talks about a consideration which can be expressed in money terms. And your natural love and affection which your wife is giving is a consideration which cannot be expressed in money terms. Hence, it is not a consideration for the purpose of clause number 4. It will be as good as you have transferred the asset without consideration, and accordingly the clubbing happening is correct. Understanding? So this was your note number 7. Read this entire part. Natural love and affection does not constitute adequate consideration because it cannot be expressed in money terms. Yes or no? And clause 4 talks about a consideration which can be expressed in money terms. Lawmaker never intended this consideration to be some other consideration. Always the lawmaker had the consideration while drafting the law that this consideration is monetary. So interpretation of this consideration should not be any consideration. It should be a consideration expressed in money terms or can be expressed in money terms. And since your love and affection cannot be done, then it does not constitute consideration. Therefore, assessee in the absence of monetary consideration cannot argue that the natural love and affection from his or her spouse was adequate consideration for transfer of asset by such assessee to the spouse. Accordingly, in such case, it will be considered as if the asset was transferred without any consideration, and hence clubbing provisions shall become applicable. Yes or no? Done, sir? Now see. Note number 8. Have you heard about pin money? Pin money, pin money. P-I-N, pin money. Have you heard about pin money? What is pin money? It is a kind of pocket money. But when that pocket money is given by a husband to the wife, no, then it is known as pin money. If Appa gives us, then it is pocket money for us. But if Appa gives it to Amma, then for Amma it is a pin money. See, usually what happens, females since the beginning had a role of, taking care of the household. Right now the females are going out, majority of the females are going out, they are earning money, but in the earlier days, and right now also many females take care of the family, yes or no? My mother is a housewife. Maybe many of you having moms, housewives only. Our mothers are not going outside to earn money. So what my Appa used to do when he was earning? My mother's expenses. See, there are certain personal expenses of a female also, no? Like buying dress, sari, going to beauty parlor, yes or no? There are many personal expenses which a female will do. And that poor female is not going to earn money, so she will be dependent on that on that pocket money, on that money, on whom? Husband only. So the husband is only going to give money to meet those personal expenses. But usually, no, all the mothers, all the females, I don't know what power they have. The God has given what type of power to the females, I don't know, that they are able to save money. And they are able to save very smartly. My mother used to save money like anything. If my father has given her some money, no, that from this money, do your personal expenses, okay. See, to meet the household expenses, father will give separate money, okay, no. But in addition to that, extra money my father used to give to my mom, which my mom never used to spend on herself. She always used to save that money. Sometimes in that box where she keeps rice, in that box she will put 500 rupees note, okay. Sometimes below in the cupboard, below the clothes, she will keep some money. In the temple at home, she will keep some money. So as a kid, I always used to see that my mother keeps small amounts at different parts of my home. I was when I was a kid, no, I was very naughty at that thing. And my friends used to go and play video games. There were video game parlors. So for 1 hour, they used to charge 5 rupees at that time. Okay, 5 rupees for 1 hour. Video game parlors are there, and there are too many video game stations are there. And on every station, So kids are playing. If you want to play for 1 hour, no, you have to give 5 rupees. Give 5 rupees, play for 1 hour. 1 hour over, go to home. Okay. So I never used to have that money because my mom, dad, they never used to give me pocket money at that time. Because they used to think that giving pocket money to children is spoiling them. They will buy whatever they will they want, okay? They will eat chocolates, this and that. So they never used to give me pocket money. But all of my friends used to get pocket money, 2 rupees, 5 rupees from their parents. Not everyday basis, but 2-3 days. So all my friends used to go to play video games. And one fine day, one of my friends took me to that video game parlor. I saw that and I loved it. Then I started going with my friend. He used to play and I used to watch. He used to play, I used to watch. One fine day, I got some 10-15 minutes time to play. So I loved it. And then at that time, I thought that even I should come to play here. But I cannot come. Pockets are empty. No money. So then I thought that let's fill my pocket. How to do that? I asked money from my amma. Then, Mom, I want 5 rupees. For what reason you want 5 rupees? 5 rupees was a big amount at that time. Okay. 5 rupees? Why do you want 5 rupees? Amma, I want to go and play video games with my friends. And all of my friends used to play video game along with thumbs up. They used to drink thumbs up and they used to play video games. So what happened? My amma said no. And I cannot ask my appa. He'll become angry and he'll start hitting me. Okay, so the only person whom I can ask is my amma. And amma said no, straight away no. Amma, I want to play video game. No. Amma, but no. Amma, all my friends are playing. No. So now no is there. And every day, when as a kid, if you are told not to do anything, no, you'll be attracted to do that thing only. So I was finding some ideas that how do I get that money? How do I get that money? Okay, once on one day afternoon, I was sitting at home, no, after coming from school. I was sitting, I was thinking. And that day morning, my friends in the school, they were talking about video game, that they want to go and play video game in the evening. Okay. So they had decided and they did not ask me. Why? Because they knew that this fellow is never having money. So he won't come. But I wanted them to ask me also that will you come? We'll enjoy this and that. And they were very excited at that time. And as a kid, even I wanted to join them. But since they did not ask me, no, it was hurting me. And in the afternoon, I came home thinking, since the school only, while walking, I was thinking that how will I join them today? I want to surprise all of them that see, even I have money and even I can come and I can play. So, double excitement, no, to giving them surprise. It was satisfying ego and also that enjoyment of playing the video game. I came home. I was sitting in the afternoon and I saw my mother, 10 rupees note, she was putting inside the temple. And that time I saw her. Okay. And in the afternoon, when she slept, no, God, extremely sorry. I went to the temple, okay, went near the temple at my home and I said, so sorry God, I know that stealing is not a good thing, but I'm extremely sorry. Only for today, from tomorrow I will not do it. Okay. 10 rupees note, which my mother kept that day, I took that 10 rupees, okay, and I went out in the evening. And evening, when I reached that video game parlor, no, I reached there like a king. See, even I have money. I will play. And that day, all my friends played for 1 hour. I played for 2 hours. I had 10 rupees, no? So, 2 hours. After playing for 2 hours, it was like very exciting for me. And I enjoyed. Now, if you do a wrong thing once, no, we'll do it again. That day was the beginning when I did a wrong thing for the first time ever in my life. And next day also I was feeling like I should go. But next day I did not do anything. But day after that, I started stealing money every day from my home itself. Okay. And I knew all the different places where my mother keeps money. And that was nothing but the pin money given by my father, and which he used to save to, to meet certain contingencies. That sometimes the days are good, sometimes the days are not good. So you should have money for survival. Okay. So I used to steal. But my mother noticed that the places where she is keeping the money is not found there. And moms are really smart. Really smart, huh? She came to know that something wrong is going on. My sisters were very small. One sister was 4 years old, another sister was 6 years old. And I was 8 to 10 years old at that time, 8 years old. Okay. So, my mother was having a doubt on me that these two girls cannot do such thing. And they are in front of my eyes for the full day. This creature. And in the evening also, he has started staying late outside. Some problem is going on. One day, when I was stealing in the afternoon, she caught me red-handed. I was stealing from my kitchen. So there was a rice box which was kept above. I was on the table, I got up and I had that rice box in my hands, and I had put that hand in the rice box to keep the, take out that money. Rice box is here, money is here, and my mom is standing. She just saw me, that's it. She just saw me, did not speak a single word. No, she did not speak a single word, and she started crying. She started crying then and that time, that you are stealing money from your own house. Okay. So that day, I saw my mother crying for the first time because of me. And that hit me really hard. But that was not the end. She cried, so she'll take revenge for that. So that day, I could not steal, in front of my mother. If my mother has caught me, so now I kept that money and I said, Amma, sorry, I'll not do it again, this and that. She did not talk to me only. Night my father came. She was crying and telling the entire incidents to my father. You could have seen the face of my father that time. It is still in front of my face. He was red. Completely angry. Okay. And after my mother finished, he gave me a look. And then he caught me with my collar. And from here, he started hitting me like anything. That was the first time when my father hit me. And hit me very badly, very badly. And that was the first and last time when I stole money from my house. And that was the lesson given by my parents. Okay. So, I stopped playing video games and all. So, what is this incidence? This incidence is because of that mothers saving what? Pin money. So, whenever I, think about this thing, pin money, whenever this discussion comes, immediately I remember that incident, that my father used to give money to my mom to meet personal expense. What my mother used to do with that money, she used to save that money for a year or so. And at the time of Deepavali, she will take out all that money, she will count that money, and she will buy some gold or some FD she will keep, so as to, safeguard the future of the family. So 20,000, 30,000, at that time it was a huge amount. sometimes 10,000 rupees. She will invest that money in some asset. She was that smart at that time. Now also the things are happening the same, but instead of my father giving her the money, I give her the money. Okay. And with that money, she takes me to a jeweler shop. I might have told you. Okay. And sometimes no, whenever we are into that light mood at house, no, we always discuss that incident when she caught me for the first time. And right now also she cries whenever we have that discussion, no. That thank God your father taught you a lesson at that day. Otherwise you would have been on a very wrong track if we would not have stopped you at that time. So with this, what I want to tell you, that pin money given by a husband to the wife. Usually wives will save that money, save that pin money. And that saved pin money is invested in some asset. Now tell me, the income of that asset will be clubbed in the hands of husband or will not be clubbed? First of all, the pin money given by the husband to wife is not an income in the hands of wife. And out of the pin money, whatever savings are done, and if those savings are invested in some assets, so the income of that asset is not liable for clubbing. This is a Delhi High Court judgment. This is a Delhi High Court judgment. If the property has been acquired, asset has been acquired by the spouse out of the pin money or household savings, then income from such property shall not be liable for clubbing. Yes or no? Will you remember this? Now see, one more important thing. Husband has transferred an asset to wife. Husband has transferred an asset to wife. So the income of that transferred asset is already clubbed. Now that income is getting saved, accumulated. Accretions. You can say what? Accretions. What is the meaning of accretions? Accumulating the income. So one asset is transferred. The income of that asset is already clubbed in my hands. Yes or no? Now that income which the spouse is earning, which is already clubbed in the hands of husband, that income is accreted. Accreted means accumulated. Now out of that accumulated income, if some new asset or property is acquired by the spouse, will the income of that property be clubbed? The answer is no. Income of a new asset will not be clubbed if that new asset was acquired through accretions. Acquired by investing the amount of accretions of that income which is already clubbed. The clubbing provisions can be extended only to the income of transferred asset or income of the converted asset if the transferred asset is converted into another form. So the clubbing provisions can be maximum extended to that asset. Yes or no? So if I have transferred one asset, so from that asset whatever income is earned, that can be clubbed. If that asset is converted into some other form, so income of the converted asset can also be clubbed. Clubbing provision can maximum reach to that converted asset only, not beyond that. So if the incomes of the transferred asset or converted asset is already clubbed in my hands, and accretions of that income is invested in some another asset, so the income of that another asset will not be liable for clubbing. Why? Because that another asset was neither an asset which I transferred, and it was neither an asset which was a converted asset. Yes or no? So the income of that asset will never be liable for clubbing. And this is a very important point. They have exploited this point 2-3 times in the exam. Now how this point will be there? One asset, debentures were given by the husband to wife. Interest on that debentures, this much amount. For example, 50,000. How much? 50,000. So that 50,000 debenture interest, what did I say? 50,000 debenture interest will be liable for what? Clubbing. Now, in the question they have written, that the 50,000 interest coming from the transferred debenture was invested by wife in shares. What is invested? Interest on debentures, which is already clubbed, huh? Now that 50,000 debenture interest is invested in new asset. Which asset? Shares. And from these shares, 10,000 rupees dividend is earned. 5,000 rupees dividend is earned. This type of small adjustment can be given in the question. So full-fledged question on the assessee is given. Who is the assessee? Assessee is Mr. Avinash. Mr. Avinash, following details of Avinash are given. Based on that, calculate the total income. And one adjustment is given. Avinash has transferred debentures worth rupees 10 lakhs. Sorry, worth rupees 5 lakhs to his spouse, Mrs. Smriti. Okay. And from that debenture, interest is 50,000 earned by Smriti. And that 50,000 rupees interest was invested by Smriti in shares of X Limited, giving dividend of 5,000. Tax effect. Interest on the transferred debentures will not be taxable in the hands of Smriti. It will be taxable in the hands of Avinash, because it is an income from the asset transferred without consideration, without an agreement to live apart. Yes or no? So the clubbing of this income will happen in the hands of Avinash as per 6414. But the income which is already clubbed, accretions of that income is invested in some other asset. And the income of that asset, new asset, will not be liable for clubbing. It will be taxable in the hands of Smriti. So whenever you will calculate the total income of Avinash, you are just supposed to club how much? 50,000 debenture interest and not the dividend on shares. That will be the taxable income in the hands of Smriti. Whenever you will calculate the total income of Smriti, in that total income this 5,000 will come. Will you remember this? So who is this? Husband. Who is this? Wife. Asset is transferred. So from the transferred asset, the income is there. That income is already clubbed. Now accretions of this income, accumulations of this income was invested in some other asset or property. So the income coming from that asset or property which is acquired through accretions of this income, yes or no? The income of that asset will not be liable for clubbing. Please be very careful about this point, huh? Okay. Should I move ahead? Understood? Okay, now the last point, 10th point. See what this point wants you to say. This point says that on 1st of April 2024, this year or last year? Last year. Okay. Business was started. Business was started by Mrs. Madhuri. So Madhuri has started a business. So in this business which she has started now, capital was invested. Capital was invested. How much capital was invested? Example, 10 lakh rupees capital was invested. Now this capital belongs to Madhuri only. So Madhuri from her own pocket, from her own money, started the business. Understanding? Now in this business, profit or loss will happen? Tell me, profit or loss will happen? So in the previous year, 24-25, this business was started with a capital of rupees 10 lakhs. And this business gave a loss. Loss of rupees 4 lakhs. How much? 4 lakh loss. Tell me, what will be the Closing capital of this business. Profit or loss? Entire loss will be treated as Madhuri's loss. Her business, loss is there, so the loss is Madhuri's loss, no? Yes or no? And it is a loss in the business. That loss is not going to increase your capital, it is going to decrease your capital. Okay, from 10 lakh rupees, now your capital will come down to 6 lakh. What if there was a profit then? Your capital will increase. And why it is increasing? Because it is always assumed that whatever profits are there, no, at the end of the year, you might have made the final accounts. And when you make final accounts, at that time what you do? You tally the balance sheet first or you close the P&L account? You close the P&L account, and in the P&L account whatever profits are there, those profits you carry forward to the balance sheet and you add to the capital, if you remember that. Why you add that to the capital? Because in the business next year, whatever capital was there, that will be invested in the business. So along with that, the profit will also be invested as a capital in the business in the next year. It is never assumed that the profits are taken out from the business. It is always assumed that the profit for this year will be invested as a capital to do the business in the next year. So that is the reason why profits are added to capital. So next year to do the business, the capital will increase. Assuming that the profits for this year are kept in the business and not withdrawn. Understanding? So if profits are there, the profits are added to the capital. So the next year to do the business, will I have that same capital or increased capital? Increased capital. With increased capital, if I do the business, I might earn more profits in the next year, yes or no? But what if the loss is there? The loss will decrease my capital to do the business, yes or no? So, as on 31st March, how much will be my capital now? 6 lakhs. So, 6 lakh is the capital. Now what happened now? The business was in loss. So, Madhuri's husband gave 10 lakh rupees. Sorry, not 10 lakh, 2 lakh rupees. Gifted to Madhuri that take this 2 lakh rupees, invest in your business, yes or no? Hello? And continue your business. Because there is a financial loss in your business, okay? So as a husband, I am having 2 lakh rupees, so that 2 lakh rupees I gave to my wife. And that money was given on, for example, 1st of April 2025, and on the same day, that 2 lakh rupees was invested in the business by Madhuri. So on 1st April 25, what is happening? Husband gave how much rupees? 2 lakh cash gift, okay, which was invested. Invested in what? Business on the same day by Madhuri. Done, sir? Now tell me, as on 1st April 2025, I will start doing the business for this year. Yes or no? For this year, I will start doing the business with a capital. So whatever capital which is going to be used in my business for the next full year will be the opening capital only, no? And it is assumed that the whatever profits will be earned in this business for the full year is earned by utilizing the capital which was there as on the first day. So what was the capital in the business as on the first day, which will be used in the business to earn the profit for this year? It was 6 lakh only, sir. It was 6 lakh. And as on that day, husband also gave what? 2 lakh, and that was also invested in the business on the same day. So 6 lakh plus new capital introduced. How much? 2 lakh. So total capital in the business as on the beginning is 8 lakh. Now it is always assumed that whatever profit will be earned for this entire year, no, will be earned on this capital only. Capital as on first day of the previous year. So what is the capital on the first day? 8 lakhs. With this capital, the business was done and the profit was earned for the full year. You have to always remember this thing. Okay. So now tell me, what is the net profit for this year? Example, net profit for this year was 1,60,000. How much? Now this 1,60,000 is a profit by utilizing capital as on first day. How much capital was utilized? So for the full year, 8 lakh capital was utilized to earn the profit for this year. Now don't you think out of this 1 lakh, some profit will be relating to this 2 lakh also? Which was not Madhuri's own money. It was the money of husband given to Madhuri, invested in the business. Yes or no? What if husband would have invested that 2 lakh in any business on his own name? So from this 2 lakh, whatever profit he would have earned would have been treated as his income. So now investing that 2 lakh on his own name in any business, he is investing that 2 lakh on the name of his spouse in the business, so that the profit on this 2 lakh is not treated as my income. The profit on this 2 lakh is treated as the income of my spouse. If I want to earn profits from a business, so I will invest 2 lakh rupees capital in the business to earn the profits, no, on my name. But instead of doing that, the 2 lakh rupees invested as a capital in a business, not on my name, on the name of my spouse. So for that 2 lakh rupees, how much profit was earned? If for 8 lakh rupees, profit earned is 1,60,000. So out of this 8 lakh, on this 2 lakh, how much profit should be there? 40,000. How did you get it? Cross multiplication. Okay, no? So you did what? 1,60,000 into 2 divided by 8. How much? 40,000 profits are relating to that 2 lakhs. Yes or no? And what about 1,60,000 minus 40 will be 80,000. Sorry, 1,20,000. Yes or no? Tell me, I have split this entire year's profit into 2 parts. Okay. So out of this profit, some profit relates to this 2 lakhs, which was gifted by the husband and invested in the business of the spouse. And the balance profits are not related to that 2 lakhs. Yes or no? So even this 40,000 will be liable for clubbing in the hands of husband. That 40,000 will not be treated as business profit in the hands of wife, Madhuri. That 40,000 will be treated as profits in the hands of her husband. Because that 40,000 is on the capital invested in the business of Madhuri out of the cash gift, and which was there as on the first day of the previous year. So as on the first day of the previous year, what is the total capital? 8 lakhs. Out of that total capital, you have to check that as on the first day, out of the total capital in the business, yes or no, out of the total capital in the business, how much capital was given by the husband and invested in that business? On that capital, whatever profit is earned for this year will not be treated as spouse's income, it will be treated as the income of the husband. Even this will be liable for clubbing. So tell me, how much profit for this year will be taxable for Madhuri? Entire 1,60,000. Sir, Madhuri's business is giving her profit of 160, but still for Madhuri only 1,20,000 will be taxable and 40,000 will not be taxable in the hands of Madhuri. It will be taxable in the hands of husband. Will you remember this? Now one more question. What if the cash was gifted on 11th April? And on that same day, the cash was invested by wife in the business. So what will be the opening capital? Will it be 8 lakhs or only 6 lakh? So as on the first day of the previous year, capital was only 6 lakh. With that 6 lakh only, the profit is earned. So the entire profit belongs to Madhuri. Nothing will be clubbed in the hands of husband. Why? Because as on the first day, the capital invested in the business does not have any amount given by the husband. Even if it was given on 11th April. But you cannot identify that from 11th April till 31st March, how much profit was earned with that 2 lakhs. Getting my point? Because the profits does not accrue evenly in the business. So it is always assumed that whatever profits are earned in the business for the full year are earned by utilizing the capital as on the first day. And as on that first day, if there is no money invested in the capital by the given by the husband, then there will be no clubbing. Then this 40,000 will not be clubbed. Then that entire 1,60,000 will be taxable as income in the hands of spouse. Did you understand this? Yes or no? So, first day of the previous year, total capital you will check. Total capital in the business. Full year, what is the profit you will check. And in that capital, if some amount is given by the husband, which was invested in the business in that capital, yes or no, as on the first day. So the profit, proportionate profit relating to that amount will not be the income of the spouse, it will be income of the transferor spouse, yes or no, will be clubbed in the hands of transferor spouse. Will you remember this? Sure? Okay. Now this was your note number 10. See, where the asset or cash transferred directly or indirectly by an individual to his or her spouse is invested by such spouse in any business, then the proportionate business income, meaning profits arising from such investment, is to be included in the total income of such individual. If the investment is in the nature of contribution of capital, then the interest on such capital shall also be clubbed. Sometimes it might also happen that the wife is a partner in some partnership firm. So wife will invest capital. So if wife is investing her own capital, then entire interest is on her own capital. Yes or no? Nothing will be liable for clubbing. But wife is investing 10 lakh rupees. Out of that 10 lakh rupees, 4 lakh was given by husband. So you are investing how much? Wife is investing how much? 10 lakh. And on that 10 lakh, interest will come from the partnership firm. Yes or no? That entire interest will not be wife's income. Because that entire interest is on 10 lakh. Out of that 10 lakh, how much was given by the husband? 4 lakh. So proportionate interest relating to that 4 lakhs will also be clubbed in the hands of husband. But you have to check the capital and everything as on the first day of the previous year. Done, sir? Such proportion has to be computed by taking into account the value of aforesaid investment as on the first day of the relevant previous year to the total investment in such business by the spouse as on that day. Done? And to understand this, there is a small example. Okay, this same type of example we are going to see as a question also. Don't worry. And that same type of example with different numbers I've already explained. Okay? Should I move ahead? So this is the end of your class number Clause number 4. Now coming to clause number 6. Tell me one thing. If you remember, this is an individual, right? No? This is an individual. This individual is giving what? Any asset. Any asset is transferred to whom? Spouse. So income of this asset earned by spouse will be liable for clubbing. Why I did this? Why any individual will transfer this asset? Because the asset remains at home and the income also comes at home. Because there is no agreement to live apart. Yes or no? And why would I take money from my spouse? So I gifted that asset to my spouse. From that gifted asset, whatever income is coming is going to come at my home only, no? Hello? And the asset also remains at my home. So to catch the assessees and to charge the income, there was a clubbing provision. Which clubbing provision was there? 64 subsection 1 clause 4. So as per clause 4, whatever income the spouse will earn will be liable for clubbing, yes or no? So now can the assessee transfer the asset to the spouse? No, because he knows that if I will transfer to the spouse, they will do the clubbing. So assessee will try to make such transfer that the transfer is also made. Asset is still at home. Income is also coming at home. Yes or no? But the clubbing provisions of clause number 4 should not arise. What he will do? Tell me. Will he transfer to spouse? No. Instead of transferring the asset to spouse, now he will transfer the asset to father-in-law or mother-in-law. Individual is what? Father-in-law or mother-in-law. Any individual. Now knows that my son will get married. So son is not going to in-law's place. Son is going to stay here only. Yes or no? Who will come to my house? Daughter-in-law will come. Son's wife will come. Yes or no? And if daughter-in-law will come at my house, she stays with my family in my house. So instead of transferring the asset to my spouse, to keep the asset at my home, to get the income at my home, I was transferring the asset to my spouse. Yes or no? But if I was transferring to spouse, they were doing the clubbing. So to avoid that clubbing of clause number 4, what I will do? I will transfer the asset to my son's wife. See, if my spouse is staying at my house, so my son's wife is also staying at my house only, no? So if I will transfer the asset to my son's wife, what will happen? The asset is remaining at my house only. The income of that asset is coming at my house only. So asset is in my control, income is in my control. But now the clubbing provision of clause number 4 will not be applicable because I have not transferred the asset on the name of my spouse. Rather, I have transferred the asset on the name of my son's wife. Which asset you have transferred? Which asset? Any asset, including house property. Because for this house property, you will not be a deemed owner. You are a deemed owner for a property which you transfer to your spouse. So there the clubbing will not come. Clubbing will come for other assets. Here, if you transfer the asset to your son's wife, it can be any asset, including what? Including a house property, and that asset was transferred without taking adequate consideration. Then whatever income from that transferred asset is there, yes or no, income will be clubbed in the hands of transferor individual. Because we know that you have done this transfer to avoid the provisions of clause number 4. You were very well aware that if you will transfer this asset to your spouse, the asset is going to remain at your house, the income is also going to remain at your house. So we were clubbing that income. So to avoid that clubbing, you have done this transfer. So that the asset still remains at your house, income still comes at your house, and the clubbing of clause number 4 is avoided. So to avoid that clubbing, you have done this transfer. So don't worry. Here we'll do another clubbing, clause number 6. So the income of that transferred asset earned by whom? Son's wife will also be clubbed in your hands, but not as per clause number 4, as per clause number 6. And all the notes, note number 1 to note number 10, which I explained at the time of clause number 4, equally applies in this case also. Not a single change. If the asset is given and it is converted into some other form, then income of that converted asset will also be liable for clubbing. Relationship must be existing both at the time of making the transfer as well as at the time of accrual of income. Yes or no? If the transferred asset is converted into some other form, that income of the other converted asset, meaning cash is gifted and cash is invested in some FD, cash is gifted, cash is invested in some house property. So income of that new asset will also be liable for clubbing. But income from new asset acquired through accretions will not be liable for clubbing. All the points which I have discussed with clause number 4 are equally applicable here also. Now somebody will have doubt. Sir, instead of son's wife, can the asset be transferred to daughter's husband? It can be transferred to daughter's husband also, no? Nobody will do that. Bloody that fellow is taking away my daughter from me. So he will take away the asset also, no? So nobody is going to transfer the asset to daughter's husband. If it is transferred there, the asset does not remain with me. Income does not come to me. Because daughter's husband is not going to stay with me. He is staying with his own family. And bloody he is not leaving my daughter, he is taking away my daughter. Won't he take away my asset? This transfer can be done to keep the asset at my home, to get the income at my home. The transfer can be done only to son's wife and not daughter's husband. Understanding? Hello, sir. So this was your clause number 4. Did you understand? Please pay attention. See, what is this? 64 subsection 1, clause number 6. Income arising to whom? Income arising to son's wife from an asset transferred without adequate consideration. So for example, this is an individual. Individual can be male also, female also. They are not talking about only male individuals. Individual can be any individual. Yes or no? So individual can be male also, female also. Now this individual has transferred any asset including house property. They have not written. See, have I written any asset other than house property? No. Any asset including house property is transferred to son's wife, directly or indirectly, without taking adequate consideration. Then the income of that transferred asset earned by son's wife, income from that transferred asset will be liable for clubbing. Even the transferred asset is converted into some other asset. So income of that converted asset will also be liable for clubbing. All the points which you have already done in clause number 4 are equally applicable here. Done, sir? Should I move ahead? Next point. See, clause number 7 and clause number 8. These two clauses I will be doing together. Okay? Pay attention. This individual knows that if the asset is transferred to whom? To spouse. See, if the asset is transferred to spouse, okay, he knows it very well that clubbing will apply. If the asset is transferred to whom? Spouse. So the income of that asset will be clubbed in my hands as per clause 4. So will he transfer to spouse? No. Because if he will transfer to spouse, what will happen? Clubbing will happen, no? So he will avoid. He will avoid transferring the asset to spouse. So to whom he will transfer? Son's wife. To avoid this clubbing, he will transfer to son's wife. Or he will transfer to son's wife. Now here also he knows that if I will transfer to son's wife, to avoid clause number 4, if I was transferring to son's wife, they will catch me in clause number 6. And by applying clause number 6, they will do the clubbing. So this individual very well knows that transferring the asset to spouse will make him liable to pay tax on the income. And transferring the asset to son's wife will also make him only to pay tax on the income, because clubbing will happen at both the places. Here clause number 4 will apply, here clause number 6 will apply. So instead of transferring the asset to spouse or son's wife, now he will transfer the asset to any other person, any person who is not a spouse, not son's wife. So the asset can be transferred on the name of a company. Asset can be transferred on the name of a partnership firm. Buddy, I will myself only form a partnership firm. I will myself only form a company. Partnership firm, company is a person. Yes or no? Or I might transfer the asset to one of my relatives. The person can be any person. Yes or no? Now I am transferring this asset. Asset is transferred to any person, and that asset will be transferred without taking adequate consideration to this person. So the income of that asset, what did I say? Income of that transfer asset which will be earned by this person, if I start taking this income on my name, if I start taking that income directly or indirectly in my hands, don't you think here section 61 will be applicable? Because now the transfer of asset will become revocable transfer. Yes or no? Why? Because I have started taking the benefit of the income of the transferred asset. So if the income of the transferred asset directly or indirectly comes to me, then the transfer becomes revocable, and the income of that transferred asset will be clubbed in my hands as per section 61. I will be caught in section 61. So I cannot tell this person to give the income to me. No. But I will tell this person to use that income for the benefit of my spouse or my son's wife. Possible? Whatever income of that asset is there, 10% you keep. Keep 10%, no? Remaining 90% use for the benefit of my spouse, use for the benefit of my son's wife. Now this transfer is not a revocable transfer. Why? Because the asset transferred by me, the income of that asset directly or indirectly not coming to me. Section 61 will not apply. And section 64 subsection 1 clause 4 clause 6 will also not apply. Why? Because I have not transferred the asset to my spouse or sons. So I have avoided clause 4 also, I have avoided clause 6 also, and I have avoided section 61 also. And now the income of that asset, after keeping some asset, that person will transfer the income or use the income for the benefit of my spouse or son's wife. What if from this asset, total income 60,000 income is earned? How much income is earned? Out of that income, 50,000 income is used for the benefit of spouse or son's wife. In short, 50,000 income coming in the hands of my spouse or son's wife is as good as 50,000 income coming in my hands only. If it will come in the hands of my spouse, ultimately it is going to come at my house only. If it is given to my son's wife, ultimately that income is going to come to my house only. Although the asset does not remain with me, but it remains with a partnership firm which belongs to me only, no? Although the asset does not remain with me, but it remains with a company which is owned by me only. So asset is still with me, but now not held by me on my own name, it is held by me on the name of my company, held by me on the name of my partnership firm. And out of that asset, whatever income is there, out of that income, some income is directly flowing to my spouse or son's wife. And to that extent, income will again come back to me at my household. The income will again come back to me. So I have avoided all the clubbing provisions. So what the government says, whatever income used for the benefit of your spouse or son's wife will also be clubbed in your hands. Not the entire income of that asset. Not the entire income of that transferred asset, but whatever income out of that, whatever income from that asset, from that income, whatever income which is used for the benefit of your spouse or son's wife will also be liable for clubbing as per 64(1)(7) if it was used for the benefit of your spouse, and if it was used for the benefit of your son's wife, as per clause 8, it will be clubbed in your hands. Because we know that why you have done this transfer. You have done this transfer to avoid the provisions of clause 4, clause 6, and also the provisions of section 61. So this entire income of this asset, no. Out of that income, whatever income which was used for the benefit of your spouse or son's wife, that will be liable for clubbing. Even we will club that income also. Understanding? So tell me here, this individual has transferred an asset directly or indirectly to other than spouse or son's wife, to any person, okay, without taking adequate consideration for the direct or indirect benefit of spouse of such individual and for the direct or indirect benefit of son's wife of such individual, yes or no? Then income from such transferred asset which is utilized for the immediate or deferred benefit of spouse, income from such transferred asset which is utilized for the immediate or deferred benefit of son's wife, that income will be liable for clubbing. That income will be liable for clubbing in the hands of the transferor individual as per clause 7, as per clause 8. Both the things are same. Copy paste. You will not see the change in the handwriting also. Copy and paste only. But instead of spouse, I have written son's wife. That's it. One and the same thing. Understood? Should I move ahead? Now see example on section 64(1)(7) and clause 8. Mr. X has transferred his immobile property to, so there is a company. What do you think? He will find out any company and transfer the asset on the name of the company. PQR Limited is any company. That PQR Limited might be a company owned by Mr. X only. Or very close relatives of Mr. X. Understanding? So if this company is transferred to PQR Limited, the asset is transferred to a company, PQR Limited, subject to a condition. See, I am transferring the asset subject to a condition that out of the rental income of such property, a sum of rupees 48,000 per annum shall be utilized for the benefit of my spouse or my son's wife. So for example, you are getting 60,000 income from the property for the full year. Out of that, 48,000 rupees will be utilized for the benefit of my spouse or son's wife. Then in such case, rental income amounting to 48,000 meant for the benefit of Mrs. X or Mrs. A, meaning spouse or son's wife, shall be liable to be clubbed in the hands of Mr. X. Moreover, the provisions of section 56(2)(10) shall also get attracted here. See, in the earlier cases now, gift provisions were not getting attracted in the hands of transferee. If I was transferring the asset on the name of my spouse, so for my spouse, it was not a taxable gift under the head IFOS, because she was receiving the asset from her spouse. My spouse, for her, I am her spouse only, no? So my spouse is an individual. For example, my wife, she is an individual. She is receiving asset from husband, meaning spouse. So any asset received from husband, whatever may be the amount, gift provisions will not be applicable. What if I have transferred the asset to my son's wife? So who is an individual? Son's wife, receiving the asset from father-in-law, mother-in-law, who is a relative. So for her also, the gift provisions will not be applicable. But here you have to be careful. Here you have to be careful. Mr. X is transferring the asset to, and this person was PQR Limited. So that company is receiving the asset from Mr. X, yes or no? Without adequate consideration. Don't you think for the company it will be a taxable gift under the head IFRS? So the gift provisions will also be applicable. Understanding or not? So here 56,210 shall also get attracted in the hands of PQR Limited if the stamp duty value of the immovable property transferred by X is more than 50,000. Done, sir? Okay. Now coming to 64 1A. 64. So tell me, first of all, which all transactions you have done? Have you done section 60? What was there in section 60? Transfer of income. Transfer of income by any person without transfer of asset. Asset giving you this income. Yes or no? 61. Income from asset transferred by way of what? Revocable transfer. Income to any person. Income to any person from any person. Yes or no? So income from an asset transferred by way of revocable transfer. 62. Exceptions. Exceptions to 61. 63. Definition. Definition of what? RT. RT means revocable transfer. 64. Subsection 1. Clause 2. Remuneration to from any concern where assessee means individual, where individual has substantial interest. So individual has a substantial interest in a concern. From that concern, remuneration to spouse was given. Yes or no? 64.1 clause 4. Income of asset other than house property transferred to spouse. Okay, no? Clause number 6. Same. Income of asset transferred to son's wife, no? Duplicate. Income of assets. Now here, including. What will I write? Including house property transferred to son's wife. Okay. Then clause number 7. Income from income of asset transferred to any person for the benefit of spouse. How much income? Income utilized. Income utilized. Okay, no? Clause number 8. What will you say? Same thing. Income of asset. Income of asset transferred for the benefit of son's wife. Yes or no? It will be clause number 8, no? Transferred for the benefit of son's wife. How much income? Full income of the asset or only the utilized income? Yes or no? Now we'll come to 64 subsection 1a. Very important discussion. In majority of the question papers, almost every attempt, this clubbing provision is tested with main question as an adjustment. So 1 or 2 attempts you will not see this adjustment, but then again it starts. Clubbed income of minor child. So income of minor child. So do you have any minor child? Yes. Very good. Income of your minor child will also be liable for clubbing. Yes, your minor child's income will be clubbed in your hands. But sir, if my minor child is earning from any skills, talent, knowledge, etc., then my minor child is working in movies. He's an actor. Or he's a good dancer. He performs on the stage, performs in various events. Yes or no? He might be a singer also. So for every stage performance, every concert, etc., every show, he is going to get money. Is he himself earning money, or I am earning money on his name? He himself is earning money from his own talent, skills, knowledge, etc. You know Pragnanand, chess player. He started playing chess since he was a child, and he participates in big chess competitions. He's a professional chess player, and from each of the chess event he is earning income. Is he earning income from the sports which he is playing? Yes. These incomes will not be liable for clubbing. But any income other than this income earned by a minor child will be clubbed in the hands of assessee, meaning parents. In whose hands the income will be clubbed? Come on, tell me. Father or mother or for both? Definitely one income cannot be clubbed in the hands of both the parents, no? It has to be clubbed in the hands of any one parent. Father or mother. Before applying the clubbing provisions of 64(1)(a), without this clubbing, ignore that this clubbing was not there. All other clubbings were there. All other incomes are there, yes or no? Calculate the total income of both the parents. Total income of both the parents has to be calculated without applying this clubbing. But if other clubbings are getting attracted, those clubbings will be considered, yes or no? So now you will have to check the total income of which parent was higher. So if the total income of father was higher, all the incomes of minor will be clubbed in the hands of father. If the total income of mother was higher, all the incomes of minor will be clubbed in the hands of mother. So clubbing of minor income purely depends on what? Total income of the parent. So the parent whose total income is higher, in the hands of that parent the income will be clubbed. But that total income has to be calculated without giving effect to 64(1)(a). Now tell me, what if the marriage between the parents does not subsist? Any one parent has died, or both are alive but Both are divorced, meaning the marriage of the parents does not subsist. Then the income of the minor will be clubbed in the hands of that parent who has the custody or who manages the minor. Understanding or not? But what if the marriage subsists? Both are living, both are together, then any one parent whose total income is higher. Yes or no? What if both the parents have died? Then in the hands of legal guardian. Understanding? So income of the minor child will be clubbed. Now see, minor child other than what? Handicap. So if the minor is suffering from disabilities as specified under section 80U, then income of this minor child will not be clubbed in your hands. Why? Simple reason. If you have transferred your income on the name of this minor child, no, who is a handicap, we think that you have not transferred the income to avoid tax. You have transferred the income to safeguard the future of this minor child who is a handicap. That God forbid if something happens to you, at least the minor is having a source of income and minor is not financially dependent on someone else. So some incomes are already earned on the name of minor is okay, no problem, will not club if the minor is a handicap minor. So any income of a handicap minor will not be liable for clubbing. What if minor is earning from special talent? That income will not be clubbed, whether the minor is a handicap minor or a normal minor child. Yes or no? What if other incomes? Other incomes will be clubbed. Other incomes will be clubbed. But it will be clubbed only if the minor is a normal minor. If the minor is a handicap minor, there will be no clubbing. Will that income be taxable? Yes. But it will not be taxable in your hands by clubbing. It will be still considered as your income of your minor child. Understanding? What about the income of minor married daughter? See, child marriage is illegal, but still it happens in India. Sir, murders are also illegal, no? Happening, no? Huh? So I am not going to say, or we are not going to discuss, so child marriage is not allowed, no? Or not allowed, but still it happens. So what Income Tax Act will do about that? Whatever has to be done as per the other law, no? Indian Penal Code. Hello? Bharatiya Nyaya Samhita. Now the name of the law has been changed. Earlier it was Indian Penal Code, now it is Bharatiya Nyaya Samhita. Okay, no? So whatever steps are going to be taken as per other law. What Income Tax Act has to do with that? But Income Tax Act has identified that child marriages are also happening, and what if some minor is there and that minor is minor married daughter? Minor married daughter. So the income of minor married daughter will be clubbed in the hands of parents-in-law or parents. So it is specifically given in the clubbing provisions that income of minor child will be clubbed in the hands of parents, including minor married daughter. All the incomes of minor married daughter. What did I say? All the incomes of minor married daughter are liable for clubbing in the hands of her parents only and not in the hands of parents-in-law. Understanding? But wait, one income of the minor will not be liable for clubbing, but still it will be taxable in your hands. Income of a house property transferred to minor without adequate consideration is not liable for clubbing, because as per section 27 you are already a deemed owner. Understanding? So what if your minor is a handicap minor? So first of all, one by one we'll start discussing about the income. Income is coming from a property. So you have one property. You have transferred that property on the name of your minor without taking adequate consideration. Clubbing will happen or clubbing will not happen? Clubbing will happen. Sure. You have a house property. You have transferred that house property to your minor. Yes or no? Minor should be other than minor married daughter and handicapped minor. There in section 27 I have already told you. So as per section 27, any income of the property, house property, which you have transferred to minor child, for that income you are considered as a deemed owner. For that income you are considered as a deemed owner. Yes or no, sir? So the income of that property will be taxable in your hands because you are a deemed owner. But for that the minor has to be any minor other than handicap, other than minor married daughter. So if I have a property, I have transferred that property on the name of my minor child, will the income of that property be taxable in my hands by doing the clubbing? No. But still that income will be taxable in my hands because I am a deemed owner of that property. So which income I am talking about? 3 types of minors are there. Huh? How many types of minors? 3 types of minor. 1, handicap minor. Handicap minor. 2, minor married daughter. 2, minor married daughter. And 3, any other minor. Yes or no? 3, any other minor. So one by one we are going to discuss about these minors, okay, no? And different incomes which these minors are earning, whether they will be clubbed, you are a deemed owner, no clubbing, yes or no? So first income, come on, tell me. First income. Income from a house property transferred to minor without consideration. Without adequate consideration. Come on, tell me. You have a house property which you have transferred to your minor child without taking adequate consideration. Income of that property. First of all, that income cannot be clubbed. That income cannot be clubbed. Because for that income you are already a deemed owner. But you are a deemed owner only if the minor is any minor other than. So you are a deemed owner only in the last case. So here you are, what? Section 27 will apply and you are a deemed owner and the income of that property is already taxable in your hands. So this income, therefore this income, no clubbing will happen under section 64(1)(a). Why no clubbing will happen? Why no clubbing will happen? Because this is already taxed under the, in your hands as your income because you are a deemed owner. So since you are a deemed owner, this will not be clubbed. Done, sir? Now what if the minor married daughter is there? Minor married daughter, you are not a deemed owner, and handicap minor also, you are not a deemed owner, yes or no? So now tell me, if you are not a deemed owner, will that income be liable for clubbing? The answer is yes. But only if you are a minor married daughter. Because handicap's income, handicap minor's income is not liable for clubbing. So here clubbing will not happen only. 64(1)(a), clubbing will not happen only. But here 64(1)(a), clubbing will happen. 64(1)(a), clubbing will happen. And this clubbing will happen in the hands of parents. and not in the hands of parents in law. So here what happened, tell me? The income was taxed because you were a deemed owner. Here the income will be taxed because the income is clubbed. Here not a deemed owner and no clubbing. Income is taxed once only. Either as a deemed owner the income will be taxed, or under section 64(1)(a), by doing the clubbing the income will be taxed. But here if you will see, no, hello, neither the income will be taxable in your hands as a deemed owner, nor it will be clubbed, because the income is earned by a handicapped minor. Will you remember this tax effect? Sure, no? Now tell me, we are talking about other income now. Which income? Income from special skills, talent, knowledge, etc. So minor is earning income from his special skills, talent, etc. Tell me. Deemed owner. House property thing is done. Huh? Now section 27 discussion is not going to happen. Now you are supposed to say clubbing will happen or clubbing will not happen. Happen, not happen. Why? Because you are a handicapped minor. No? Even if you are minor married daughter, clubbing will not happen. And even if you are a normal minor, clubbing will not happen. So no clubbing will happen. What did I say? No clubbing will happen for this type of income. Whatever type of minor is there, this type of income will never be clubbed. Whether this income is earned by handicapped minor or it is earned by minor married daughter or any other minor child. Yes or no? Now please pay attention. Which is this income, guys? Income from special skills, talent, etc. Yes or no? If this income is invested in any asset, property or business, which income is invested? The income which the minor is earning from special talent. Yes or no? That income is not clubbed. But if that income is invested on the name of minor in any other asset, yes or no? Property or business, and from this asset, property or business, if there is any income, tell me, will this income be clubbed or it will not be clubbed? All incomes of minor will be clubbed, except only this income. So if this income is not clubbed, then done. But if this income is invested in some asset, property or business, and from that asset, property or business, from this asset, property or business, if any income is earned, no. Guys, this income will definitely be liable for clubbing. Yes or no? But not if the minor is a handicap minor. Because for handicap minor, the income is not liable for any clubbing. Understanding or not what I am trying to tell you? Hello, sir. So, if the handicap minor is there, income will not be clubbed. What if minor married daughter is there? This income will be clubbed. Yes or no? And what if any other minor is there? This income will be clubbed. Done, sir? 64(1)(a) will arise. Now tell me, any other income? Any other income of minor? Business income, winnings income, gift income, interest income, whatever income coming on the name of minor will be liable for clubbing. Yes or no? But only if minor is a normal minor or minor married daughter and not a handicapped minor. Understanding? So all the incomes, what did I say? All the incomes of minor are liable for clubbing, even if the minor is a minor married daughter, other than the special incomes. Yes or no? And other than income from the house property transferred. Income from the house property transferred. Even that income will not be liable for clubbing. Understanding? But only in the hands of this type of minor. In the hands of minor married daughter, it will still be clubbed. Because there you are not the deemed owner. And here, no clubbing, no deemed owner. Because minor is a handicapped minor. You have to remember this table. Will you remember this table? Sure. Sure. Now, whenever the income of minor is clubbed, so can I say clubbed income of minor? So this is an assessee. This is an assessee. Okay. So in the hands of assessee, there is a minor. Okay. Minor's income is clubbed. So can I say that is a clubbed income for this assessee? Under section 64(1)(a). This will be exempt in the hands of assessee under section 1032 up to maximum 1500 PAPC per annum per child. Up to 1500 the clubbed income will be exempt. So if first minor's income was 10,000, is it getting clubbed in your hands? Yes. So full 10,000 will be clubbed and out of that 1500 will be exempt. So net, how much will be clubbed? 8,500. Second minor is there earning only 900 income. Will that 900 be clubbed? Yes. But fully exempt. Understanding? Third minor is also there. Third minor's income will be clubbed. Will you get the exemption for third child? Because there is no restriction that the exemption will be available for maximum 2 children. This exemption is available for all your minors' income. Yes or no? So even if you have 5 minors, income of all the 5 minors are getting clubbed in your hands. Yes or no? So for each minor per annum, you are going to get the exemption of section 1032 amounting to 1500. And this exemption will be available only if assessee does not follow. What if he follows 115 BSE? Then this exemption will not be available. Full income of the minor will be clubbed without taking any exemption. Will you remember? Should I move ahead? So that's it. This is all about minor. So see, income earned by a minor child from his skills, knowledge, talent, manual labor, etc. will not be clubbed. But all other incomes will be liable for clubbing in the hands of that parent whose total income before giving effect to the clubbing provisions is higher. Clubbing provisions of 64(1)(a). In the hands of that parent who maintains such minor child where the marriage of the parent does not subsist. I have already told you that in whose hands the income will be clubbed. This income will not be clubbed, but all other incomes will be clubbed. Income earned by a handicapped minor is not liable for clubbing. Okay, next one. Income of minor married daughter. Which income? Which income? All incomes. All incomes including the income of property transferred to the minor married daughter without adequate consideration. Even that income will also be liable for clubbing. Because there you are not a deemed owner. Understanding or not? Now next one, note number 3. Individual has transferred a house property to minor child. This minor child should not be minor married daughter, and this minor child should not be handicapped minor. Yes or no? Then income from that house property will not be clubbed. Why? Because for this property, the individual is already assessed as what? Deemed owner under section 27. But provided this minor is not a handicapped minor or minor married daughter. Okay, no? In that table, no, I have covered each and everything. Okay? Next one. Note number 4. The assessee shall be allowed an exemption under section up to a maximum of 1500 per annum in respect of clubbed income of each minor child. In other words, if the clubbed income of each minor child is more than 1500, then such income to the extent of maximum 1500 shall be exempt and the balance income shall be taxable. However, if such income is up to 1500, then such entire income shall be exempt. Exemption under 1032 not available if the assessee follows. You have to remember. Okay. Next one. Minor child earns income from the special talent. Will it be clubbed? This income will not be clubbed. But if this income is invested into any other property or asset or business, and from that asset, property or business income is earned, that income will be clubbed. Because that income is not earned from special skills, talent, etc. Understood? Next one. 64.2. This is the last subsection, last clause. After this, 2-3 small points we are supposed to discuss. Okay, no? But this is the last clubbing provision. Now see, you tried your best to keep the asset with you and keep the income with you. First you transferred the asset to spouse. Why? So that the asset remains with you. Income also comes to you. They caught you. 64.1.4. So you tried other way. So that the asset remains with you and income also comes to you. You tried the other way. What? You transferred the asset to sons. Why? There also they caught you. Clause 6. You tried to avoid clause 4 and clause 6. They caught you in clause 7 and clause 8. To avoid that also, you transferred the asset to your minor. You started earning incomes on the name of your minor. There also they caught you. Minor's income also club. Now last option. Last option. Why don't you start taking the income on the name of your family? HUF. Because in the eyes of law, HUF is a separate person. Yes or no? So in the eyes of Income Tax Act, HUF is a separate person. Even HUF will get 2,50,000 basic exemption. If 115 BSc followed, 4 lakh rupees of exemption. Yes or no? And if the asset is transferred on the name of my HUF, asset is still with me only. But earlier I was holding that asset on my own name. Now I will start holding the asset on the name of my family. What difference does it make? It is held on the name of my own self, or it is held on the name of my family. What difference does it make? The asset is still with me. Earlier the income was coming on my name. Now the income will come to me only, but on the name of my HUF. What difference will it make? Yes, it will make a lot of difference. Why? Because earlier if I was taking that income on my name, asset was on my name, I was taking the income on my name, I used to pay 30%. Now I have kept the asset with myself. Income is also coming to me only, but the income is coming on the name of HUF. Because I have transferred the asset on the name of HUF. Now the income will be coming on the name of HUF. Asset is still there with me. Income is still coming to me. But I will not pay tax on that income. Because I have transferred the asset on the name of my HUF. Income is not my income. Income is the income of HUF. I can do that or not? So they will catch me in 64.2. They will catch me in 64. Assessee. Are you an individual? Yes. Are you a member of any HUF? Yes. Have you transferred your self-acquired property without consideration to your HUF? Without adequate consideration. Have you transferred your property to HUF? Why so much of love all of a sudden for your family? Why have you transferred your property on the name of your HF? Because you don't want to keep the property on your name. Because if you will keep the property on your name, the income will come on your name and you will have to pay tax on that income at 30%. But what if you will transfer the property, self-acquired property? Self-acquired property means SOP, no? SOP is self-occupied property. That is different. This is self-acquired, meaning a property which is acquired on your own name. You are the individual owner of this property. Self-acquired property. So you're transferring that property without taking adequate consideration to your HUF. Income from that transferred property earned by HUF will not be taxable in the hands of HUF. Rather, it will be taxable in your hands. The entire income will be liable for clubbing, as per section 64(2). And we know very well why you have done this. To avoid the taxes. But we want the tax on this income from you only. So we'll club that income in your total income. That's it. Understood or not? But wait. The asset which you gave to HUF, can that asset be a subject matter of partition? So later on, see, you are an individual. You have transferred one asset to your HUF. So whatever income of that asset is there is liable for clubbing. It will be clubbed, yes or no? But now what is happening? After some time, the HUF is going for partition. Partition is happening. So will the HUF distribute all the assets, including this asset which you have given? Because now the asset does not belong to you, the asset belongs to HUF. And this asset will also be made subject matter of what? Partition. Partition will happen. So this asset will also be divided between what? Members. So at the time of partition, what did I say? At the time of partition, if the above property is also made the subject matter of what? So the property which you have given to your HUF, this property is also made the subject matter of what? Partition. This property is also partition between the members. Then whatever share of this property, what did I say? Whatever share of this property you will get, the income of that share will be taxable for you. Whatever share of this property your spouse will get, the income of that share received by the spouse will only be liable for clubbing under section 64(2), not the entire income of the property. Because now some share will be given to other members also, no? So whatever share of the property received by other members, from that share, whatever income they are earning should be taxable for them. That will not be liable for clubbing. But before partition, what did I say? Before partition, entire income of the property will be liable for clubbing. After partition, after whatever share of this property which was given to your spouse, income of that share only received by your spouse will be liable for clubbing under section 64(2). Some share you have received, so income of that share will be your income only, no? But some share will be received by your spouse. Income of that share only will be liable for clubbing. What about the share of this property received by other members? Will that income be also clubbed in your hands? No, that income will not be clubbed in your hands, because that is the income of the respective member, will be taxable in their hands. What if some share is coming on the name of your minor child? Will that income be clubbed? Yes, but not as per 64(2). It will be already clubbed as per 64(1)(a), as per your minor's income. Yes or no? And from that income, you are going to get 1500 exemption also. Understood? So, till the time the partition is not taking place, what will you do? Entire income of the transferred asset will be liable for clubbing. But if the above property is later on made the subject matter of partition by the HF, then the share in such property is received by spouse of such member will be, and from that share, whatever income the spouse is earning, that income of the share received by the spouse will only be liable for clubbing under section 64(2). Income, if the share in such property is received by any other member of such HUF, income of such other member from such share, and income of such other member from such share will not be taxable in the hands of member. This income will not be liable for clubbing. But what if some share in such property is received by minor child of that member, yes or no? Then income of the minor child from such share will not be clubbed as per 64(2) like it was done for spouse. It will not be done for minor child also under section 64(2). Why? Because it is already a minor's income, will already be taxed as per 64(1)(a). And on that, no need to apply 64(2) separately. If you will apply 64(2), what will happen? One income will be taxed twice. Once as a minor's income as per 64(1)(a), and second time as per 64(2) also. So since the income is getting taxed already as per minor's income as per 64(1)(a), no need to club as per 64(2). Will you remember? Yes or no? Now tell me, if the member has given the asset to HUF, member has given asset to will it be treated as a gift in the hands of HUF under the head IFRS? Did I ask you how to make a rocket? I'm asking a simple question. Become an HUF now. Think, no. Your HUF, you are getting some asset from your member. Will it be taxable as your gift under the head IFRS? A simple question I'm asking. You are not giving me the answer. Will it be taxable as gift in the hands of HUF? No. Because HUF is receiving that asset from member who is a relative. So this will not be taxable in the hands of HUF. Not be taxable in the hands of as gift. So can I say in the hands of HUF? In the hands of 56(2)(10) gift provision will be applicable, will not be applicable? Will not be applicable. Will not be. Now think from the point of view of the member. Member has given the asset to. You are a member. You have given your asset to the HUF without consideration or for a consideration. So for you, it is an exempt transfer under section 47 because you are gifting the asset. So for Mr. A, for Mr. X, under the head capital gains, under the head capital gain, section 47 will apply and no capital gain will be calculated. Understanding, no? So you acquired that asset, member, you acquired that asset in 2009-10 for 5 lakhs. And in the year 25-26, you are transferring this asset to HUF. Hello? When the value of that asset was 15 lakhs. How much is the total appreciation? 10 lakhs. Will not be taxable in your hands. Because for you, the transfer is an exempt transfer. Hello? Now, who is getting that asset? In 25-26, HUF is getting the asset. What is the value of that asset? Value of that asset is, will not be taxable for HUF as a gift. Because HUF is getting that gift from member, meaning relative. So gift provisions applied or not applied? Sure. Now later on HUF will transfer this asset. Will HUF calculate capital gain? HUF transferred this asset for 21 lakhs. Full value of consideration minus transfer expense Nil. Net consideration. What will be the cost of acquisition? Cost to previous owner. This transaction I did not tell you in 49.1 because I wanted to explain now. Why did you apply 49.1? Because the provisions of gifts are not made applicable to HUF. That 15 lakh value is not taxed in your hands as gift. Hence 49.1 will be applicable. Cost to previous owner. This is also a mode specified under section 49.1. If HUF is getting any asset from the member, self-acquired asset from the member whose income is already getting taxed in the hands of member as per 64(2). So for that asset, what will be the cost? Cost to previous owner. So whatever will be the cost in the hands of the member will be deemed to be the cost in the hands of HUF. Period of holding of the member will also be included in the period of holding of HUF. Getting my point? And based on that it will be decided that the gain is short term or long term. But wait, to calculate that gain, you are always going to apply 49.1 as a cost of acquisition in the hands of HUF. Now whatever gain will be calculated, no, will be clubbed in the hands of member 64(2). Because that gain is from that asset which was transferred by member to the HUF. So any income of that transferred asset, even if it is in the nature of capital gain, will be liable for clubbing. It will be clubbed in the hands of member. Will you remember this? Sure, no? Okay. Now see, always remember one thing. 2 or 3 small things I am telling you. Always remember. Under the clubbing provisions, incomes to be clubbed are computed incomes and not gross incomes. What do I mean with this? Computed income and not the gross incomes. First of all, if my wife is earning income, for example, I have given some cash to my wife. I have given some cash to my wife, and that cash is invested by my wife in a house property. So which income my wife is going to earn? That income is liable for clubbing. Yes or no? So how much income will be clubbed? Entire rental income will be clubbed, or the computed income will be clubbed? So first of all, the income of that house property needs to be computed in the hands of my spouse. Rental income, 30% standard deduction, interest on housing loan, yes or no? By doing all those things, the income will be computed. And that computed income will be liable for clubbing. Do you remember one case when I have a substantial interest in any concern and that concern is paying salary to my spouse, yes or no? So the concern is paying salary to my spouse, a concern where I am having a substantial interest. So the total salary given by the concern is a gross income. That is not going to be clubbed. First, the salary income of my wife will be computed from that income. So salary income of wife, taxable under the head, salary, minus deduction, etc., whatever was available, standard deduction, 50, 75,000, professional tax, yes or no? So first the income will be computed. That computed income in the hands of my spouse will be liable for clubbing. Understanding? Do you remember there was a business in which there was a business of my spouse in that business, I had given some money as a gift, and that money was invested by my wife in that business. So the profit of that business, first the business profits will be computed. And out of that computed profits, whatever proportionate profits are there, those proportionate profits will be liable for clubbing. So computed income will always be clubbed. Yes or no? Hello? Computed incomes are always positive. Will always be clubbed. But sometimes the computed income can be negative also. What if instead of profit, it was a loss in the business? What if house property income computed, after taking deduction, it was a negative income? So if computed income is clubbed, meaning after computation, the income is positive, that is clubbed. And even if it is negative, meaning a loss, even that will be clubbed. Bloody, if the taxable income is there, you are making me pay tax on that, then what if negative income is there? Club that negative income also. I need to take the set off of that loss. Yes or no? So not just the positive incomes, but the negative incomes will also be liable for clubbing. You have to remember this. Will you remember? Tell me. So clubbing of which income? Negative income. Since the term income also includes losses, that is negative incomes, hence such negative incomes are also eligible for clubbing. In other words, if the income is to be included in the total income of the individual is a loss, then such loss shall be taken into account to determine the total income of such individual. Understood? Now, pay attention. Okay, here computed income, positive or negative. Now pay attention. One simple thing. This is Mr. X. Who is this? Mr. X. And this is Mrs. X. Okay, no? Mr. X is there, Mrs. X is there. This is Mr. A and this is Mrs. A. What am I going to do? Asset is transferred by A to Mrs. A. No, Mrs. X. Asset is transferred by X to Mrs. X. No, Mrs. A. Now, asset is transferred. For example, this is debentures. Debentures means 9% debentures. Let me write 9% debentures. 9% debentures worth 5 lakhs are transferred. Okay, no? And in return, cash rupees 6 lakh is transferred. Beta, debentures of 6 lakh is transferred. Only debenture of rupees 6 lakh is transferred. Against that, cash of rupees 5 lakh is transferred. Now why this is happening, I am telling you. Mr. X, from this debenture, he is earning 54,000 interest. How much interest? So to transfer that 54,000, Mr. X wants to transfer this 54,000 to his wife. To do that, what he will have to do? He will have to transfer the debentures to his wife, no? So Mr. X will transfer the debenture to the spouse, so that 54,000 will be transferred on the name of wife. But in that case, clubbing will be attracted. Even Mr. A wants to invest in one FD. Mr. A is having 5 lakh rupees. which he wants to invest in one FD, and FD is having 9% rate. So if he will invest this 5 lakh on the name of his wife in that FD, so meaning cash gifted to wife, invested in a FD, earning 54,000 interest, yes or no? Will be taxable in the hands of Mr. A. Both knows that if we transfer our incomes to our respective wives, what will happen? Clubbing will happen. So why don't we transfer to each other's wives? So I will transfer 6 lakh rupees, Mr. X will transfer 6 lakh rupees to Mrs. A, 6 lakh worth of debenture to Mrs. A, so that the interest on that debenture, how much? 54,000 is received by Mrs. A. And in return, against which Mr. A will transfer cash of rupees 5 lakhs in the form of FD, giving interest at the rate of 9%. Yes or no? How much? 54,000. Oh, wait. This is 6 lakh. This is 6 lakh. Okay, this is 6 lakh. So earning interest at the rate of 9%. So I will transfer cash in the form of FD. I will put that FD on the name of your wife in the bank. So cash will be given by me. I will put the cash in the bank in an FD on the name of your wife. That is Mr. A is saying. Now both the transactions are done. These are known as cross transfers or indirect transfers. What will you call them? Cross transfer, or you will call them indirect transfer. Now in this cross or indirect transfer, what is happening? Transfer of one asset is taking place as a consideration for transfer of another asset. And both the transfers are connected with each other, forming part of a single transaction. So both the transfers are forming part of a single transaction as a consideration for each other, yes or no? And both are done in such a way that the clubbing provisions are avoided. Supreme Court's judgment is there. In this case, even if there is no specific provisions for clubbing, still the clubbing should happen here. Because see, this 54,000, what Mr. X will say? 54,000 is earned by my wife, but it is not earned from an asset which I have transferred. No. So this will not be clubbed in my hands. And what Mr. A will say? No, that 54,000 should not be clubbed in my hands also, because Mrs. X is not my wife. This Mrs. A is earning how much? 54. What Mr. A will say? That my wife is earning some income from asset which I have not transferred. Yes or no? And what Mr. X will say? This income will not be taxable in my hands also, because Mrs. A is not my spouse. So both the clubbings will not happen. But can you see that both the transfers are connected with each other, forming part of a single transaction? A single transaction is there. In that single transactions, both the transfers are made as a consideration for each other. And they are done in such a way that the clubbing provisions does not get attracted. To avoid the clubbing provisions, these transfers are done. And they are connected with each other. It is apparent that one transfer is made as a consideration for another transfer, and it is done to avoid the clubbing provisions. Then here in this case, even if there are no specific provisions, still the clubbing will happen in the case of indirect transfers or cross transfers. Yes or no? So whatever income is earned by Mrs. X will be liable for clubbing in the hands of Mr. X, and whatever income is earned by Mrs. A will be liable for clubbing in the hands of Mr. A. How much was the asset? How much was the value of the asset? On that, how much income is earned? This entire income will be clubbed. How much was the value of the asset? On that, how much income is earned? This entire income will be liable for clubbing. Done, sir? Sure, sir? Now pay attention. I will change the example a little bit, okay? This is Mr. Y. And this is Mr. P. This is Mrs. Y. And this is Mrs. P. One asset is given and another asset is given. Okay, no? Now let's say debentures are given. The value of those debentures was 12 lakhs. Against that, Mrs. P is earning income of 72,000. 72,000. And for that, Mr. P has transferred a bank FD worth 11 lakhs only, and that bank FD was giving an income of 72,000. So you transfer 72,000 to my wife, I will transfer 72,000 to your wife. But to transfer my 72,000, I had to transfer debentures of 12 lakh, and to transfer 72,000, Mr. P had to transfer a bank FD of 11 lakhs only. Possible or not? Hello? Now can you see? This 72,000 is an income on 12 lakh. This 72,000 is an income on. This entire 72 will be liable for clubbing. Full 72 will be clubbed here because it is coming on 11 lakhs. But this entire 72 will not be clubbed because it is coming on 12 lakhs. So I will have to see that how much income Mrs. P would have got if the debentures of 11 lakh would have been transferred in return of FD of 11 lakhs. So common amount of asset you have to find out. Understanding? To transfer that 72,000, Mr. Y transferred what? 12 lakh worth of debenture. To transfer that same 72,000, to transfer that same 72,000, Mr. P had to transfer an FD of rupees 11 lakh only. So this 72,000 is the income on 11 lakhs. But this 72,000 is the income on 12 lakhs, no? So what should have been the income on 11 lakh worth of debentures? Only that much interest will be clubbed. So here what are you going to do? 72,000 into 11 upon 12. 72,000 is the interest on 12 lakh divided by 12 lakh into 11 lakhs. How much? 60. Only this much interest will be clubbed in the hands of Mr. P. So out of 72, 66 will be clubbed in the hands of Mr. P. So minus 66 here. How much remaining? How much remaining? This 6,000 will not be clubbed, will be taxable in the hands of Mrs. P only. So common amount of asset, you have to check, yes or no? If 12 lakh worth of debentures are given and in return 12 lakh worth of FD was given, see here in our case, debentures was 6 lakh, cash was 6 lakh. So this is the income on 6 lakh. This is also an income of on 6 lakh. So this entire income will be clubbed and this entire income will be clubbed. There is no problem because the assets transferred has a common value. But here the asset transferred is not having a common value. So you will have to first find out the common value. How much is the common value? 11 lakhs. How much is the common value? 11 lakhs. So income on 11 lakhs worth of asset needs to be clubbed. Whatever excess interest is there, that is excess income is there, that will not be clubbed, will be taxable as income of that respective spouse only. Understood? This is Keshavji Morarji, Supreme Court case law. In the case of cross transfers or indirect transfers, the clubbing will happen like this. Understood? Will you remember this? And last case. Last last thing. See, I have already discussed this, okay? Liability of the transferee in case of clubbed income, section number 65. Now, let me ask you one thing, a simple thing I'm asking you. If I am a transferor, I have transferred one asset on the name of my spouse without taking adequate consideration, without an agreement to live apart. The income of that asset will be clubbed or will not be clubbed? Will be clubbed. So that income was clubbed in my total income. Am I supposed to pay tax on that income? Sure. Am I supposed to pay tax on my income? Yes. And I'm also supposed to pay tax on clubbed income also. So my income tax liability, the tax will be on my income also, and the tax will be on clubbed income also. Hello? What if because of any reasons I'm not able to pay the tax? Neither on my income nor on clubbed income. I'm not able to pay that tax. Sir, how come? I died. Will I be able to pay tax? I filed for insolvency and court has declared me insolvent. Will I be able to pay tax? Then, can the tax on my entire income be demanded from my spouse? But the tax on my clubbed income can be demanded from my spouse, as per section 65. Understanding? At least on that clubbed income, madam, you pay, no? Madam cannot say that earlier this income was coming to me, that time you clubbed that income in the hands of my husband. If my husband is not able to pay, now you cannot collect that tax from me. My wife will give that argument. But to counter that argument, section 65 is there. Let's see, we tried our best to recover that tax on the clubbed income from your husband, Umang sir. But he is not able to pay that tax on the clubbed income. If he is not able to pay that, we have full power, full authority to issue a demand notice to recover the tax on the clubbed income from you. And in that case, you cannot deny. You will have to pay that tax. Section 65. Done. And this is the end of your clubbing provisions chapter. Now we'll see what type of questions are framed. Yes or no? But that we'll see after the break. And within 1 hour maximum, we'll complete all the questions of clubbing, and then immediately we'll start with the deductions and computation of total income, which we are going to start today and will end tomorrow. Okay? So, see you all after the break.